Let's start with Frontier Energy, ASX code FHE. Frontier's Waroona Renewable Energy Project in WA is ideally positioned to support Australia's clean energy transition. How? Let's hear directly from CEO Adam Kiley.
And my name's Adam Kiley, CEO of Frontier Energy. For those that don't know, Frontier Energy is an ASX-listed company with a market cap today of around $150 million. And we're developing the Waroona Renewable Energy Project, which is located around an hour south of Perth. Stage 1 of the project is looking to develop a 120 megawatt solar facility with an 81.5 megawatt battery attached to it as well. Overall, the project has extremely strong economics and we're essentially ready to go with development now. But overall for the project, what you need is all the building blocks in place for development. And that's what we've been working on over the past 12 months, as well as the market moving forward. And that's put the company in an extremely strong position at the moment. So for any project, you need a strong market macro fundamentals, and that's what we have. Everyone knows that energy prices are going up. And in Western Australia, we're seeing a very large growing supply gap, which is forming largely due to the closure of the coal assets. We have a pathway for sale in energy, that's connections onto the grid, as well as permits and approvals. And revenue certainty, which is the most recent thing that we've unlocked through reserve capacity. So reserve capacity, which I'll step through in a bit further detail later on, is only unique in the West Australian market and has essentially guaranteed the company now 50% of revenue forecast at $32 million per annum over the first 5 years, or $160 million over that period. And that really is the unlocking of the financing event for the company. But as with all projects, the stage 1 is a fantastic start. However, it's how we're going to grow this project and the company into the future as well. We have major expansion potential to really grow this into a significant project, not just within Western Australia, but across Australia as we move towards a renewable energy transition. So before stepping through the project in a little bit more detail, I think it's important that all viewers should understand where we're at with the West Australian energy market at the moment. First off, it's important to understand that Western Australia's grid, or the WEM, is separate from the rest of Australia, which is on the NEM. And there's a few fundamental differences regarding that, and a lot of them are at Frontier's advantage. First off, if you look at market pricing, so energy prices, as we all know, we all get power bills every 2 months coming through, they're increasing. In Western Australia, we've found that energy prices over the past 3 years have more than doubled, up to an average energy price of $95 per megawatt over the course of this year. In Western Australia as well, we also get a thing called reserve capacity. Now, reserve capacity is a mechanism that's essential for the West Australian grid, as we're the most isolated grid in the world, to ensure energy is always readily available. This payment, which I mentioned at the outset, is an additional $32 million, and that price has increased by 54% over the last year. Demand side. So demand overall has continued to increase within Western Australia, and it's up around 5% over the past 5 years, sorry. However, that demand, as you'll see in the next few slides, is going to increase significantly over the next decade as we really kick into the energy transition. In Western Australia, as across the rest of the country, there is a big increase in the number of standalone batteries which are hitting the grid, and they are essential as part of the energy transition. However, batteries do not generate energy. Batteries store energy, which is fantastic during those excess energy demand periods. However, as you'll see, that those excess demand periods in Western Australia have significantly diminished over the last number of years, over the last 12 months, and they're forecasted to continue to decrease as coal is retired. Supply overall, well, as we know, we're going through an energy transition. The country's targeting 82% renewable energy generation by 2030. We're still a long way short of that today. Western Australia is currently sitting at about 40%. However, the big thing you should be taking note of here that we step through in a lot of detail next is coal. So coal generation is still 29% of energy generation today. These assets are going to be closing in the next number of years. As the Premier Cook announced again just a few weeks ago, Western Australia is aiming to be one of the first states in Australia to have all coal operations closed. And that's a really important part that should be understood by all investors. Whilst Western Australia is known to be rich of all commodities, the one commodity we are generally poor of is actually coal overall. And that's a key reason why you're seeing in other states of Australia, coal will continue to carry on. In Western Australia, we believe it won't. And that's largely because we don't have those resources there for it. So when we have a look through, so Western Australia at the moment, the state government's announced a number of major closures over the next few years. And these assets are all closing, as I mentioned, because they're old, expensive operations, largely powered by coal. When we look through these closures, so the Collie, Pinjar, Merger and second Pinjar asset, they're all owned effectively by the state government through Synergy. These assets provide a backbone for the West Australian energy generation as well as capacity, and they will all be off between 2027 and 2031. There's one independent coal operation, Blue Waters, which is a major backbone of the energy generation in the state. Now, that asset has largely been getting government assistance over the last number of years. However, that government assistance ends in 2026. When that government assistance ends through the coal mining subsidy that's been provided, up to $200 million over the last couple of years, those assets are going to become more marginal on the way through. So whilst a retirement date has not been announced yet, it is highly probable that those assets will be retiring in a similar time frame to the other coal assets. So when you look at those assets overall and you look at the retirement as well as the increase in demand which is coming through, you've got retirement of 6.7 terawatt hours of generation and then new demand coming through of around 8 terawatt hours. Now those numbers by themselves, they don't actually mean much to most people. But when you actually start putting them through, what does this mean overall? It means that in Western Australia between now and 2031, we need to develop at least 17 new wind generation assets of the same size as the largest wind farm in Western Australia. Or alternatively, we have to produce 44 new stage ones of the Waroona project by that same time frame. That obviously increases significantly as you continue to push that time frame out to 2035, both from wind as well as solar generation as well. But it's not just the generation of those assets that's required, there'll also be additional battery assets which would have to come onto the grid because we all know the wind doesn't always blow and the sun doesn't always shine. So I think it's setting the picture that we're in a market in Western Australia at the moment that there's a lot of generation coming off at the same time as the energy transition starts kicking in. Now, the government's obviously fully aware of this and they are doing as best as they can to make sure this transition happens as seamlessly as possible. However, as part of that transition, you have to make sure the infrastructure is there to get the connection of the new wind and solar and battery facilities online. Now, the government's earmarked a major expansion to the north of the state that will unlock a potential 1 gigawatt of energy generation with $1.2 billion already earmarked for that over the next 2 years. There are other projects and expansions planned. However, they haven't been costed yet and the timing remains a little bit uncertain. But this really leads into why is Frontier really so different? And we're so different because we have a connection already. So the connection, as you can see on screen, is the Lambweir terminal. It was recently highlighted by AEMO as having one of the strongest connection points within the grid. We're only 500 meters away from that project as well. And the project will be connected on the largest lines within the state, 330 kV lines. So you can see quite simplistically, we have the toughest thing as part of the energy transition, we have that connection in place. And it's not just one connection we have in place, we have a second connection application underway at the moment, which we'll hopefully look to finalise in the near future as well. And that second connection is really what gives us a massive expansion into the future that the company is forecasting. So when we look through the project in a little bit more detail, so as I mentioned, we've been working tirelessly over the last 12 months to get all the building blocks for development in place. The stage one project, as you can see on screen, 120 megawatts of solar generation with an 81 megawatt battery attached to it, will be developed and be first production towards the end of 2027. The key metrics of the project are extremely strong revenue of around $65 million of revenue with an average of $57 million of EBITDA as well. That results in very strong IRRs as well as a quick payback period. And as I mentioned, we've been working hard throughout the last 12 months to ensure that we've got all of the long lead key items in place with a major spend on the utility, Western Power, as part of the connection work. The company, now that we have that fixed revenue guarantee in place of the $32 million or $160 million over the next 5 years, we're now quickly working through financing for the project as we work through debt financing, as well as work through a number of equity funding solutions at the same time as well. As been announced by the company, we have been working through various strategic and cornerstone investors over the past 12 months with very strong interest from a number of these groups. So on to reserve capacity, because as I mentioned, it is really quite unique in Western Australia and it is a major revenue part of our overall system. Whilst reserve capacity is not on the east coast of Australia, it is actually the most common method for energy sales throughout the world and is commonly used in the UK, Europe, as well as other US states as well. However, in Western Australia, it was only introduced in 2004 due to blackouts in the state. So what is it? In short, it's basically a payment that's made to generators as well as capacity facilities to make sure when energy is at its peak demand, that energy is going to be readily available. So it's been in place in Western Australia for the last 20 years because unlike other states in Australia, we're not connected on the rest of the grid. So we need this to ensure that when we hit those peak periods in summer and now more commonly in the middle of winter as well, that energy demand is always going to be there at those peak periods of time. So how does the payment system work? Well, when you have firm capacity, and that firm capacity for us comes through the size of the battery, as well as a small amount for the solar generation as well, where we've been awarded 88 capacity credits. That's now completely locked in and as announced by the company a couple of weeks ago. So you multiply that 88 by the capacity credit price of this year, $360,000, and you end up with $32 million of revenue. Now, important from our point of view, as a new generator going onto the grid, you do have the option of locking in that price as a fixed price during the first 5 years. We did that to ensure that we can get debt finance in a way for the project, and that's now in essence guaranteed that fixed $32 million or $160 million over the course of that time. Now, importantly, when we get to the 6th year of operation, it doesn't mean that reserve capacity at that point in time disappears. Reserve capacity will be paid for the project forever and a day. But what it does mean is that the price, we don't know that today. However, as you can see on the graph, it's likely that price will at least not diminish in the future and has a potential to continue to strengthen as well. So it's a fantastic mechanism in Western Australia that we believe really helps underpin the project and is obviously a really strong part of our revenue stream. So then we look at the facility that we selected. So before we decided on the combined hybrid facility of solar as well as a battery, we looked at all different optionalities. That included looking at wind, looking at standalone solar, as well as looking at standalone battery. But when we looked at all the fundamentals of each option, we decided that the best option was solar generation, because solar generation overall is the cheapest form of generation to build. It's also the most predictable. I know tomorrow morning I'm going to wake up and the sun is going to be shining, and I know the time of the day when the sun's going to be shining as well. Whilst overall wind is an important part of the overall renewable generation metrics, when the wind blows, it can be uncertain. So whilst we're trying to hit that peak energy market every day, solar was the most predictable for us. And why the battery? Well, the battery makes sure that we can actually generate that solar energy and then we can store it. So by storing that energy, we can now create our own energy arbitrage by basically storing energy in the middle of the day when energy prices are typically lower, and then sell that energy into the peak energy periods, which is typically between 5 o'clock at night and 9 o'clock in the evening when the sun's not shining and the wind's not blowing. So we've created our own energy arbitrage. The other important aspect of having the BESS or the battery is reserve capacity. If you only went for the solar facility, you wouldn't get the large reserve capacity payment coming through as well. Now, just quickly looking at the graph to clearly explain what the strategy is overall. So as you can see with the yellow part of the graph, that's your typical solar shape, which comes throughout the course of the day. The blue line on screen, that's the energy price which has been received in the West Australian market since the start of this year. And the orange, that's when we plan on selling the battery. So quite simply, you can see from 5 o'clock to 6 o'clock in the morning, the sun will start rising in Western Australia during the summer periods. As the sun rises, so does the amount of energy we produce. But typically then you'll find energy prices start to fall away as more solar generation from households largely comes on the grid. When that occurs, we start charging our battery. So we've now eliminated the low price point periods of the day. Once the battery's fully charged by say 2 or 3 o'clock in the afternoon, that's typically when you hit peak energy conditions as well. So that's when temperatures are hitting their maximum, everyone's turning on energy generation again, turning on the air conditioning, getting home from school and work as well. You typically find then energy prices will start to rise. As the sun starts to set, however, in the evening, that's when we turn the battery on and we start to sell our energy into the market to hit those peak conditions overall. So overall, this gives us the best revenue generation outlook for the project, whilst ensuring that we have a rinse repeat cycle to ensure that we have the full battery generation ready to be sold into the market the next day. So what does this look like on the numbers overall, which is most important? Solar operations, they go for a long time. So we've assumed a 30-year operation. How it should be noted, the expectation is this will go much longer than this. So on the panels, for example, we have a 30-year degradation warranty, which will still see the panels operating at an 85% efficiency by that time. The capital number's around $300 million. And I should have mentioned at the outset, we're expecting to receive around 65% of debt in on this project. That's largely in line with what we were offered last year of around $220 million. Energy sales overall, energy sales are slightly less than the generation. That's due to the energy losses that you go from the solar generation going into the battery, which is around 13%. So what does that mean on the numbers? Revenue of around $65 million. Of that, as I've already mentioned, that's guaranteed revenue from reserve capacity for at least half. Operating costs are very low on these projects, around $8 million forecasted over the first 5 years per annum. And of that, the largest component is to do with insurances. And that results in extremely strong, robust EBITDA numbers of around $57 million average over the first 5 years. That results in extremely strong IRRs, as well as strong free cash flow yields for the project, as well as a very quick payback period. Now, what does that actually mean for investors overall? So if you look at the energy space overall for renewable companies, they typically trade on an EBITDA multiple. So once the project's up and going, as with the number of projects seen on screen, you'll start moving towards those EBITDA multiples of between 15 to 20 times multiple. In Australia or on the ASX at the moment, there's only actually 2 pure play renewable companies, both LGI as well as Infogreen. There have been a number of projects in the past, the most recent one being GenX, but inclusive of Tilt as well as Spark. These companies have all been taken out. Why are they taken out? Because a number of large investors want exposure to energy going onto a grid. But when we look at the 2 listed peers still at the moment, LGI is probably the most notable of recent, where they successfully rated $50 million at no discount, and they're trading at a major multiple of more than 20 times EBITDA margins on an EBITDA number of around $15 to $18 million per year. I'll let investors work through where we're going to be trading in the future with our forecasted EBITDA for a stage 1 alone at around $57 million per annum. And just very quickly talking about the future. So now as we start working through stage 1, where we've got all permits, approvals, environmentals, connections, as well as now the revenue certainty, which was crucial to unlocking the project, now locked away. We're now starting to, as we look to finalise the development of that project in the very near term, we've now got eyeballs onto expansion into the future. So the nearest term one is stage 2, which will be a very similar size to stage 1. And we've already got a development approval and a connection application for that underway as well. We're aiming to secure revenue certainty for this stage 2 project throughout the course of next year. And the expectation is you get similar types of returns on that stage 2 project in line with the stage 1 project. Past that, we've got further expansion through ownership of land. We own 830 hectares of land at the project, which if we used up all that land, you're looking at around an additional 200 megawatts of solar generation. But with the connections that we have on the grid, which are the things that are as rare as hen's teeth, that gives us our real expansion into the future with a long-term target of up to a gigawatt of energy generation, as well as battery storage of up to around 600 megawatts as well. So thanks very much for your time today. When you look at Frontier Energy, we're one of the very few pure play renewable energy generators of significant scale now listed on the ASX. When we look at the work that we've done over the past 12 months, we've now cleared a lot of those barriers to entry. We've now got the guaranteed revenue, which was announced just a couple of weeks ago, and we've got the existing grid connection on one of the strongest parts of the grid in Western Australia. Economics for the project are exceptionally strong. And as we all know, because we all get power bills, we're heading into a bullish energy market at the moment, with significant government support coming through from both federal as well as state governments. And when we have a look at the pathway, we've already outlined we've got significant growth potential, not just through the stage 2, but further expansion of the project as well, to make this a project of significant scale, not just in Western Australia, but across Australia as well.
Adam Kiley, thanks for the presentation. Let's go to some audience questions now. Now, firstly, when is construction expected to begin on stage 1 of the Waroona project? And when will the facility actually start generating power?
Yeah, the actual construction time at site, it's really quite quick. The timing's only actually about 6 months overall. The timing for development, however, that starts now in earnest. So there's a lot of long lead items that need to be purchased for the development of the project overall. So, for example, the lead order on batteries at the moment is around 50 weeks. On panels is around 38 weeks overall, as well as some of the substation work. So a lot of the real development work at site won't really kick off until the back end of next year, but you need that funding in place. Now, where we'll be targeting for first generation on the project will be October 2027. So give or take about 2 years from today.
And Adam, so how is Frontier ensuring that there'll be minimal environmental impact and community disruption during the development of the project?
We've been spending a lot of time with local council at the project overall, and we've been working with them overall for a long time in actually the development of the project to date. I suppose one of the other key things and a big point of difference with our project is we own all the land of the project. So we've acquired 830 hectares of land. And to be honest, the land that we own, it's farming ground which has been farmed for the last 100 years. But as that farming ground has been farmed, it's actually poorly degraded land now, and it's actually not that suitable for crops and livestock. So to be honest, overall, with the project that we have, it's probably best suited for solar energy generation or farming the sun overall.
Can you explain how the battery component improves profitability and energy reliability for the grid?
So that the key period of the day, it doesn't matter where you are, for energy generation is between 5 o'clock in the evening and 9 o'clock at night. So when everyone's going home, they turn everything on. Energy demand goes up. Doesn't make a difference wherever in the world you are. By having a battery as part of that, what it does, it allows you to harness energy throughout the course of the day when energy demand might be lower, but you do typically have higher generation during that period of time. So obviously solar generation is high during the middle of the day, as well as you get wind generation during the middle of the day or during the night periods as well. What a battery does, it allows you to store energy during those times when energy consumption is potentially lower, but more importantly, from our point of view, when energy prices are lower. So what we do is we create our own energy arbitrage by storing that energy during the period of the day when we're generating the most, to actually store it and sell it during the part of the evening when consumption's highest, and obviously when the sun is not shining and potentially the wind isn't blowing as well. So batteries are an essential part of the grid, especially for renewable energy transition as we move forward.
And for retail investors, what makes Frontier Energy a strong investment opportunity that's compared to other ASX-listed renewable energy developers?
Yeah, it's probably a really key thing first off. There aren't really many ASX-listed renewable energy companies out there. There's actually only 2 companies at the moment that we mentioned in the presentation. There have been a number of pure play renewables over the last number of years. They've all been taken out. Renewable energy companies, they're highly desirable. What we've been doing during the course of the last 12 months and before that as well, we've been really de-risking this project. So as I mentioned, we've eliminated as best as we can all the barriers to entry. We've now got connections in place, environmentals, permits. Now we've got the guaranteed revenue as well. So we've de-risked the project as best as we can before starting development of this project. And as I mentioned, when you look through the earnings that's forecasted, with a large part of that now guaranteed at around $57 million EBITDA, when you look at where other peer companies typically trade at between that 15 to 20 times EBITDA multiple, we'd like to think that investors are going to be sharing in some really good upside in terms of valuation in the share price. But then through the growth potential that we have at the company, and as I mentioned, we've got eyeballs on growth already, we'd like to think that we're going to continue to grow profitability as well as the company for a long time into the future as well.